So, you're thinking about doing business in Bangladesh? Awesome. It's a place with a ton of opportunity. But let's be real, the corporate tax system can look, well, a little intimidating. So, in the next few minutes, we're going to break it all down for you. We'll demystify everything from VAT to profit taxes, turning it into a clear, strategic roadmap. Bangladesh really does have this massive potential. But just like this quote says, actually navigating the business world there can be tricky. And that complexity, that's exactly what we're here to clear up for you today.
All right, so where do you even start? Well, your very first step is making sure you get registered the right way, especially when it comes to taxes. And that means you've got to get familiar with a super important three-letter acronym. So, before you even start dreaming about profits, you're going to run into something called VAT. It's basically a tax on transactions, and it gets applied at every single step of the supply chain. You really have to get a handle on this, because it's the foundation of the whole system for any new business in Bangladesh.
Okay, so right out of the gate, you have a big decision to make, and it all comes down to how much money you think you're going to make. If you're running a smaller operation, say with a turnover somewhere between 5 and 30 million taka, you'll go for what's called a turnover tax. That's a flat 4%. But the moment you cross that 30 million taka line, things change. Full VAT registration becomes mandatory. But wait, there's a really important catch here. For some types of businesses, that revenue number, it doesn't matter at all. If you're doing any importing or exporting, or if you're a foreign branch office, you have to register for full VAT right from day one. No exceptions, no matter what your turnover is. Okay, so you're registered. Awesome. Now let's get into the day-to-day stuff, because taxes are going to pop up in pretty much every transaction you make. All right, here's a number you'll want to tattoo on your brain: 15%. That's the standard VAT rate in Bangladesh. You'll see it on most of the goods and services you sell to your customers, and on the things you buy from your suppliers, too. Now, if importing is part of your business model, get ready. You're not just paying one simple tax at the border. Oh, no. Instead, you're going to face what they call the total tax incidence, or TTI. Think of it like a layer cake of different duties and taxes that all get piled on when your shipment arrives. So, let's take a closer look at how this actually works. You see how it's a cascading effect? It's pretty wild. You start with a basic value, let's say 100,000. First, they tack on customs and regulatory duties. But here's the kicker. The VAT and advance tax aren't calculated on the original 100,000. Nope. They're calculated on that new, higher subtotal. It's literally tax on tax. And that's how a $100,000 item suddenly has $61,000 in duties and taxes on top of it. Okay, but here's some slightly better news. Not all of that 61,000 is just gone. The VAT, the advanced tax, and the advanced income tax you pay, you can actually use those as credits against your future tax bills. That's a big deal. But, and this is a big but, that customs duty and regulatory duty, those are a direct hit. They're an unrecoverable cost that gets baked right into the price of your goods. All right, now let's talk about something really unique that can have a huge impact on your cash flow. It's called VAT deduction at source, or VDS for short. So what is it? Well, in simple terms, it means when certain customers pay you, you're not going to get the full amount on the invoice. See, they're legally required to hold back the VAT portion and pay it directly to the government for you. This means you absolutely have to plan your cash flow around this, or you could be in for a surprise. And this isn't some rare thing. This system applies to over 40 different kinds of services. So if you're in construction, IT, advertising, heck, even if you're a lawyer or an accountant, you've got to expect VDS to be a normal part of your life. It's just how business is done. Okay, we've talked a lot about the taxes on all your little day-to-day transactions. But what about the main event? At the end of the year, when you've done all that work, what's the deal with taxing your actual profits? Let's kick things off with capital gains. So if you sell off a big company asset, we're talking property, shares, something like that, and you make a profit on it, that profit gets taxed at a nice, clean, flat rate of 15%. It's a pretty straightforward calculation just based on the gain you made from the sale. Okay, now for something that catches so many new businesses and startups completely off guard. It's called the minimum tax. Here's the thing. This tax is based on your total revenue, not your profit. And here is the absolute crucial point you need to hear. You have to pay this tax even if your company loses money for the year. That's right. Being unprofitable does not get you out of paying the minimum tax. Understanding all these rules is one thing, but how do you actually manage it all, day in, day out? And that brings us to our last section, how to stay compliant and when to call in the experts. Look, staying compliant isn't something you do once and forget about. It's a constant rhythm, a cycle. You've got monthly VAT returns to file. You have to keep these super detailed purchase and sales books, and they have to be in the official government format. Then there are the annual audited financials you have to submit. And for bigger companies, you're even required to use specific government-approved software.
So when you step back and look at all of this, all the different rates, the monthly filings, those very specific record-keeping rules, it becomes pretty obvious that getting professional help isn't just a nice to have. It's a strategic move. It's how you make sure you stay on the right side of the law so you can focus on what you're actually good at, running your business.
And you can see this in the way the professional firms talk about what they do. Listen to the words they use: strategic guidance, empowering your financial future. That tells you everything. Navigating taxes in Bangladesh isn't just about filling out forms. It's a fundamental part of your business strategy. Here's another great example from a big firm. They focus on practical strategies. And that word practical is so important because this stuff isn't academic. It's about finding real-world ways to handle your taxes that won't totally derail your operations or put your company at risk. And really, this last quote just says it all. The ultimate goal for any entrepreneur, right? Hassle-free. Because let's face it, every single hour you spend fighting with tax forms is an hour you're not spending growing your business, creating new things, or taking care of your customers. So yeah, is the tax system in Bangladesh complex? For sure, it's got a lot of layers. But as we've just walked through, there is a clear path. From getting your VAT registration right to understanding those import duties to being ready for that minimum tax, it's a structured system. The rules are laid out, you know what your obligations are, and there are people who can help. So the real question isn't, can it be done? The real question is, now that you have the map, is Bangladesh your next business frontier?